and they need a sales pitch. And they've been given, here's a cryptocurrency, it's Bitcoin. It's kind of your life raft, it's digital gold. Okay, they've bought that. So BlackRock are not stupid. They have no interest in going to sell, oh, here's another cryptocurrency, which would fail. So I'm really interested in the narrative they craft. Because this I think has a potential to change the entire crypto space. That's how big this ETF is.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. Raoul Pal believes that the market will eventually shift towards an ICO model, where 70% of tokens are being released ahead of schedule, resulting in a decreased demand for fully diluted valuations. He expresses concern about the potential consequences of this strategy, citing a previous situation with EOS where participants lost interest after receiving a large upfront payment. By not paying teams in full upfront, there is a greater likelihood that they will focus on driving value and economic models, ensuring better alignment of incentives. Pal highlighted the importance of a high FDV and low flow as they motivate teams to work towards future growth. Drew attention to the impressive surge in the cryptocurrency market, noting that Bitcoin's value has been increasing by 150% annually since 2011. Additionally, he mentioned that early-stage tokens like Ethereum have experienced even greater growth. Pal mentioned that achieving capital efficiency can be challenging given the continuous generation of wealth and the influx of new money. However, he expressed an interest in exploring various strategies, such as the SU trip, which simplifies complexity and drives technological advancements. Pal believes that a key factor for achieving success is the seamless integration of cryptocurrency with the broader Web 2.0 ecosystem. And lots of things Raoul Pal discusses, so please watch the video to end and share this video, and subscribe our channel, Everyday Finance. Thanks.
The UK, for all of its flaws, and it is flawed, doesn't have this level of corporate corruption at the highest level. Europe doesn't have it. It has different. It has bureaucratic corruption. You know, different countries have different styles of corruption. The US kleptocracy between politicians and corporations is disgusting, and everybody knows it. And, you know, RFK is going to try and run on this. They'll try and stamp him out, obviously. On a long-term basis, number go up. So I'm not fussed about that. The path is interesting. I think it's going to be defined by how BlackRock define Ethereum. Right? You and I have been in the space for too long. We know what Ethereum is to us. We know what it is. We know how it positions versus other smart contracts. We know the breadth and depth of the Ethereum ecosystem and how good it is. You know, we know its failures. But here's a bunch of people coming into the space, call them RIAs, and they need a sales pitch. And they've been given, here's a cryptocurrency, it's Bitcoin. It's kind of your life raft, it's digital gold. Okay, they've bought that. So BlackRock are not stupid. They have no interest in going to sell, oh, here's another cryptocurrency, which would fail. So I'm really interested in the narrative they craft. Because this I think has a potential to change the entire crypto space. That's how big this ETF is. And not necessarily from a flows perspective. I'm sure it'll decline over time. But more from what is the narrative of the space. And my guess is we're going to build the world on we're going to tokenize the world. And Ethereum is the platform to do it. And if they sell that, and we know the finance, every single investment bank has been building teams internally for years and years. ETH now gets regulatory clarity. There's going to be a raft of product coming out of finance. It's the settlement layer that interests them the most. And the fact that you can then build layer twos. So here's something really interesting. Most people don't realize. I was in Switzerland speaking to one of the investors in the asset management company. And she's one of the senior traders for Louis Dreyfus, the commodity trading house. She trades ags, soft commodities. And I'm like, well, you're investing off my fund. You know, I'm surprised you guys don't use it internally, like stablecoins internally, because you've got operations in Angola and wherever, you know, everywhere in the world, and you need to move money around. She goes, yeah, we do some of that stuff. But all of the agricultural commodity trading houses built a blockchain on top of Ethereum 4 years ago. I'm like, what? She goes, oh, yeah, all our letters of credit, our shipping, our quality standards, you know, this is this crop and this, and all of that. It's already on blockchain. We use this in this instant efficiency. I'm like, huh. So if you think about that, what you've got is the settlement layer, the database, the super secure database that is ETH. The speed and everything of that bit, we've kind of proven with the layer 2s or layer 3s, doesn't matter as long as the settlement layer is there.
Amidst the surge in Bitcoin's bullish momentum appearing to be on track, a crypto trading expert has pointed out that investors, it seems that there are indications pointing towards potential future gains in the market. An analyst who goes by the name Mags shared their insights on July 19th. They mentioned that by analyzing historical price movements and technical indicators, it appears that there may be a significant rally on the horizon. One interesting finding from Mag's analysis is the consistent trend of sideways movement that occurs after Bitcoin's halving events. Specifically, Bitcoin tends to trade sideways for several months following each halving, with prices remaining relatively stable and showing minimal fluctuations in either direction. This period of consolidation has typically served as the last chance for investors to acquire Bitcoin at reduced prices before a significant upward trend begins. Another important aspect of analyzing Mags is to focus on the Relative Strength Index, which is a momentum oscillator that measures the speed and change of price movements. On the monthly chart, the RSI levels have not yet reached the extreme levels of 90 seen in previous bull cycles. Currently, the RSI is around 68.5, which is significantly lower than the peaks observed in past cycles. These peaks often coincided with Bitcoin reaching new all-time highs. This indicates a significant potential for expansion before the market becomes excessively bought. Currently, the monthly RSI has not yet reached extreme levels. Based on previous cycles, it appears that there is still significant potential for Bitcoin to increase in value. The upcoming phase of this bull cycle is set to be truly remarkable. The analyst mentioned that the current market conditions are favorable for a significant increase in value. The combination of the accumulation phase and the RSI levels pointing towards further upward movement suggests a positive outlook for the price of Bitcoin. In a recent analysis, MAG highlighted similarities to a previous Bitcoin outlook shared by crypto analyst Michael Vanab. In a post on July 20th, both analysts noted that Bitcoin is displaying indications of repeating historical patterns, which could indicate a forthcoming significant price movement. This pattern has been observed over the past few months. According to an observation, Bitcoin has been experiencing a period of consolidation where prices have remained relatively stable with only minor fluctuations. This extended consolidation is seen as a sign of an upcoming significant price movement that is anticipated to happen within the next 6 to 12 months. In the past, periods of consolidation in Bitcoin have frequently been followed by significant price increases, catching many investors off guard. Let's back to the Raoul Pal interview.
This is big boys games if you're going to settle the entire financial markets on it. So, you can't have something that has just a small number of validators or number of nodes. It has to be broadly spread, and it has to be super resilient to attack, because you're playing the game of nations here. So I do think, even talking to you, just clarifying in my head that there is no other choice yet. Now, that doesn't mean, and Tolly has talked about this, that you can't use different protocols for different things. Let's say you use Firedancer for the execution layer, and it can settle into the Ethereum as the settlement layer. These kind of things will happen too. And I think it'll get more and more interesting as we go. Listen, I'm even easier than that. Things that are earlier in the adoption curve, but with proven adoption, go up faster in price. I literally don't care whether it's Solana or some new thing, but it has to be at this point in the adoption curve, right? There was Solana, Avalanche, Luna, and Polygon that were the four forerunners. One went to zero, and Solana rose fastest out of the ashes. Like you, I was buying in June 2022 and really went max long as we went. So I saw the network effects were superior early, and I said, this is probably the bet, like Ethereum was in the last cycle. And then I'm a simpleton. I just use the charts and look at the ETH Bitcoin cross, the ETH Solana cross. And Solana was breaking out. I'm like, okay, that's as simple as that. So it's not, I leave the narrative as something I can discuss and debate, but really the proof is in the simplest of metrics. And we will see in this cycle a bunch, 3, 4 new protocols, new layer ones that will do really well and outperform Sol. They will all go down 99% or 98% or 97% in the next cycle, and one of those will be anointed too. We've seen this with memes. Doge has survived. And out of these memes that are around now, whether it's Pepe or whether it's Whiff or whatever, Bonk or whatever it is, one of these will be crowned the survivor for the next time around. And so I just observe these kind of patterns. When I look at using Metcalfe's law in crypto, it's a two-sided equation. One is the kind of number of active users, call it that, and the other is amount of activity on the network, which I think you can capture by value exchange in dollar terms, right? And those two seem to explain most price, and price is pretty much correct in crypto. So when you think about Doge, it is a one-sided ecosystem. It is just retail investors and a whale called Elon Musk that holds $3 billion of it. And it's maintained its value because people have stayed with the meme, because it made people wealth, real wealth. And they stick with it. They're loyal to it. Now, if Elon uses it for X, which I think he will, well, you're going to create an extreme jump in value from this thing at some point. Many of them that die lose the retail investor because they don't have an actual community. Cardano, I know we're going to get hated for saying this, Cardano is more held by retail community. But they're loyal to it, which is why it maintains its value, even though the applications haven't scaled in the way that the community would have liked it to have been. And it's true with many of these ecosystems. It's the ones that fail to actually keep the retail or fail to get... XRP is another interesting one because it actually has quite a few applications, but there are lots of small microtransactions, so it doesn't create as much value, but there's a lot of retail, and it kind of balances it out. So I just think of them really simply in these terms.
After facing years of regulatory pushback and going through numerous amended registration filings, a spot Ethereum exchange-traded investment funds are now entering the market with the introduction of publicly traded Ethereum ETF shares. These shares will be listed on popular broking platforms in the United States, alongside well-known companies like Apple Inc. and SPDRs and S&P 500 ETF Trust. The upcoming listings are a crucial turning point for the cryptocurrency markets, presenting a golden opportunity for both institutional and retail investors. Here's everything you need to know to maximize your gains. The Chicago Board Options Exchange has officially announced that July 23rd will be the launch date for the 5 ETFs that will be traded on its platform, 21 shares. Ethereum and ETF Fidelity Ethereum Fund. I'm interested in Invesco, Galaxy Ethereum ETF, Vank Ethereum ETF, and Franklin Ethereum ETF. The 4 additional ETFs will be available for trading on either a NASDAQ or New York Stock Exchange ARCA. Although there have been no official announcements from these exchanges, it is widely anticipated that they will be listed on July 23rd. Additionally, the spot Ethereum ETF will also offer staking. The answer here is no. The longer answer is maybe, but not anytime soon. Just as a refresher. Staking requires depositing Ethereum into a validator node on Ethereum's beacon chain. By staking Ethereum, one can earn a portion of network fees and other rewards. However, there is also a risk of slashing or forfeiting stake collateral if the validator misbehaves or fails. Staking is appealing because it greatly enhances returns. The annual rewards rates currently sit at approximately 3.7% as of July 9th. As reported by StakingRewards.com, in the past year, a number of issuers, such as Fidelity, BlackRock, and Franklin Templeton, sought regulatory approval to incorporate staking into their spot Ethereum ETFs. Unfortunately, the SEC rejected those requests. The issue at hand revolves around liquidity, as per individuals familiar with the discussions who spoke to Cointelegraph anonymously. Withdrawing Ethereum from Beacon Chain typically takes several days, posing a challenge for issuers who need to promptly redeem ETF shares for the underlying fund assets upon request. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.